Use the account to like tweets critical of President Trump while also defending himself gently against detractors. This account was very much in Romney's personality. No profanity. He didn't have like some weird alter ego on Twitter. I'm not sure.
The name
I'm
alone,
surprised.
John. The name, come on. The name is weird, but I love it. It makes me think, okay, I have to rethink Mitt Romney a little bit. I don't know. I feel like it was very clever and funny, and just a little bit. It was kind of great, you know. I like that he talked about it. I like that he answered "c'est moi" after Ashley Feinberg of Slate figured out who it was. I just loved the entire. I loved it. This is when I love social media. It's very funny, and I think he was using it in a kind of interesting way, and he admitted to it. And so, you know, he's sort of the anti-Trump on Twitter, Pierre Delecto, and I think we should elect him president.
Like 15 times over the period of 4 years, and then he took it private.
I think he should be president. Only Pierre Delecto should be president, nobody else. That's it. Not Mitt Romney, not anybody, but Pierre Delecto. So I liked it. There's nothing wrong with Pierre Delecto in any way. I don't believe I've said the name so many times, but I'm enjoying saying it. So there you have it.
It's kind of fun, Pierre Delecto.
It is.
Also fun, Kara Swisher. Thanks for being with us this morning.
Thank you. Bye.
Dow up 30 points, obviously, with a big drag out of Boeing today, hovering near the flat line after an initial jump to start the day. Here are the names leading the index so far. We're back in just a moment.
See, that's funny. I thought you traded options.
I'm not really a Wall Street guy.
What's the hesitation?
It just feels too complicated, you know?
Well, share it first, but JJ can help you with that. JJ, will you break it down for this gentleman?
Hey, Ian. You know, at TD Ameritrade, we can walk you through your options trade step by step until you're comfortable.
I could be up for that.
That's taking options trading from Wall Street to Main Street.
Hey, guys, want to play some pool?
I'm not really a pool guy.
What's the hesitation?
It's just complicated.
Step-by-step options trading support from TD Ameritrade.
If you're on Medicare, remember, the annual enrollment period is here. The time to choose your Medicare coverage begins October 15th and ends December 7th. So call United Healthcare and take advantage of a wide range of plans with a variety of benefits, including an AARP Medicare Advantage plan from United Healthcare. It can combine Medicare Parts A and B, which is your hospital and doctor coverage, with Part D prescription drug coverage and more, all in one simple plan. For a low monthly premium, or in some areas, no plan premium at all. Take advantage of primary care doctor visits, preventive dental care, and an eye exam, all for a $0 copay. Plus, earn rewards for completing other preventive care activities, like flu shots and annual physicals. You could also get over $150 in free health and wellness products. So now's the time to look at United Healthcare's variety of plans, and let us help find the one that works best for you. Also ask about our PPO plans that let you see any doctor who accepts Medicare without a referral, and take advantage of in-network costs, at home or traveling, when you see doctors in the United Healthcare Medicare National Network. With many of our Medicare Advantage plans, you'll have $0 copays on the most common prescriptions. In fact, last year, our Medicare Advantage plan members saved an average of over $6,500. And with Renew Active, enjoy a free gym membership and up to $115 in rewards for staying active. You can count on our guidance and support to help you get the most out of your plan. We can also help you schedule appointments or find a specialist. Annual enrollment ends December 7th. Start taking advantage of all the benefits of the only Medicare Advantage plans with the AARP name. We make it easy to enroll too. So call United Healthcare or go online today.
It's earnings season.
The biggest companies in the world are set to report.
And we're breaking down the numbers like nobody else. It's about performance
and opportunity.
It's earnings season on CNBC. I pointed out that dividends only protect the stocks, say consistent companies in this environment. Think utilities, non-retail real estate investment trusts. But for everything else, they're not putting up much of defense, are they? Nobody wants to catch a falling knife, even if it has a notoriously BIG dividend.
Still to come, Raymond James taking its price target on Apple up to $280. Stock's up more than 1.5% right now. The analyst behind that call tells us why after the break. Stay with us.
CNBC News Update is sponsored by Bright House Financial. Build for what's ahead.
You never planned on 3 generations feeling so at home in a place they've never been. But you made the plan that got you here, and you stuck to it. With a Shield Level annuity from Bright House Financial, your portfolio can benefit from growth potential with a level of protection from market volatility to help you follow your plans wherever they take you. Talk to your advisor about Shield Level annuities. Bright House Financial. Build for what's ahead.
People come to beaches, Turks and Caicos for different reasons. Some come for the best beach in the world. Some for the incredible water park. For others, it's adventure. And since everything's included, you can do it all. But no matter why they come, they all leave with memories to last a lifetime. The 1-800-BEACHES.
What gives me confidence about investment decisions? Rigorous fundamental research, with portfolio managers focused on the long term, who look beyond the spreadsheets to understand companies, from break room to boardroom, who know the only way to get a 360 view is to go around the world to get it. Can I rely on deep research to help make quality investment decisions? With Capital Group,
we could play epic music, or we could speak in an overdramatic tone, or even set off fireworks. But that's just not smarty. Instead, we let our offer do the talking. Right now, you can grab 25% off our unlimited data SIM. That's just $18.75 a month with no speed restrictions, no credit check, and no long contract to tie you in. Now that's smarty. Just search Smarty Mobile and switch today. It's easy. Offer available for a limited time only. See smarty.co.uk for terms.
Get ready for Brexit on the 31st of October. Brexit will bring changes that affect businesses in many ways, particularly if you buy from EU suppliers, sell to EU customers, provide services to EU clients, and receive customer data from other businesses in the EU. Businesses need to prepare. Find out how at gov.uk/Brexit. Get ready for Brexit on the 31st of October.
European markets closing shortly. Seema Modi is here at the exchange with a breakdown on today's action. Seema.
Hello, John. European stocks mostly higher, even as investors await progress on the Brexit front. A vote has yet to pass Parliament after the House of Commons Speaker blocked a vote today on Prime Minister Boris Johnson's deal. Now, the British pound holding steady, as are the UK banks that have been rallying over the past 1 week. The attention now shifts to tomorrow when lawmakers begin a debate on the formal withdrawal agreement bill that brings Johnson's deal into UK law. But the situation is very fluid. Headlines keep pouring through. Analysts say Johnson may have the votes, though, to narrowly pass his bill and avoid a no-deal situation. Remember, Britain's scheduling to leave the EU in just 10 days' time. One stock mover on the day pushing the stock 600 higher is shipping giant Maersk, surging after the company raised its 2019 profit forecast, citing lower fuel prices and better margins in its towage business. And the company issuing an upbeat outlook, and that comes despite lower freight rates. That stock on pace for its best day since 2016, up about 8%. And tomorrow, 2 earnings reports to keep an eye on: Volvo and Pernod Ricard. Guys, back to you.
All right, Seema, thank you very much. Let's get a news update as well. Sue Herrera is back at HQ for that. Hey, Sue.
Indeed, I am, Carl. Thanks so much. Here's what's happening at this hour, everyone. Turkey's foreign minister renewing warnings that his country will resume its military offensive in northeast Syria if Kurdish fighters do not vacate that region before the end of a U.S.-brokered ceasefire tomorrow evening. He was speaking at the TRT World Forum 2019 being held in Istanbul. Hong Kong police confronting protesters during a rally as pro-democracy demonstrations continue in the Chinese territory. Dozens of riot police were deployed for the sit-in protest at a subway station. WikiLeaks founder Julian Assange appearing in a London court for a hearing on his extradition case to the United States. Washington accusing Assange of scheming with former Army intelligence analyst Chelsea Manning to break a password for a classified government computer. That case is expected to take months to resolve. And daybreak in Dallas, Texas, revealing the extent of the massive damage from last night's powerful storm that spawned at least one tornado. The National Weather Service says the twister touched down near Love Field Airport before it tracked northeast through the city, leaving a debris field nearly 20 miles long. You are up to date. That's the news update this hour. I will send it back downtown to you guys. John?
All right, thank you, Sue. And now Raymond James taking Apple up to $280 this morning from $250. That's its price target, maintaining an outperform rating and reiterating optimism ahead of the 2020-2021 5G cycle for iPhones. Shares currently up just shy of 2% at $240. And the analyst behind this call on Apple joins us now. Raymond James's Chris Caso. Chris, good morning.
Hi, good morning.
So this seems kind of gutsy to me, Chris. I mean, Apple's up about 20% since the summer on kind of channel checks, I guess, on the new iPhone and what's not expected to be a really big cycle. What gives you the confidence that it goes even higher from here, and how much of this hinges on them actually releasing kind of a mid-cycle update to the iPhone, this SE2, early next year?
Right. So it's really a follow-through from the call we made back in July. We'd upgraded the stock back in July on the basis of this 5G cycle in 2020-2021. And the fear at the time was that this current cycle wouldn't be so great. What it turns out, again, that what we found going out to Asia, doing our supply chain checks a few weeks ago, is this cycle sounds like it's okay. And I think that gives you a good bridge between now and that 2020-21 cycle. And the stock is up to reflect that. But again, we think it's a 2-year cycle. And, it's Apple, there hasn't been a really compelling upgrade for iPhone in a couple of years. And the fact that you are getting that upgrade cycle coming is what gives us optimism.
So how strong does the holiday quarter guide have to be to justify this? Because right now we've got some great analyst notes on it, but no hard numbers from Apple on exactly how they're managing inventories and how they see the season going.
Right. So again, the checks that we had, and some other press reports came out after us as well, is that iPhone 11, the production had uptick a little bit after the first pre-orders came. And again, my view right now is this cycle is not what's important. People aren't buying the stock for this cycle. They're buying the stock for the 2021 cycle. So as long as this year is just okay, then you've got a good runway into the next 2 years.
Chris, I'm curious what you think. Wall Street Journal came out with a report showing that the iPhone XR is now being made in India for the local market there. I wonder whether you think we're going to see more of these production shifts to places outside of China in light of the tariff situation, even if, for example, we don't see the trade war between the U.S. and China ratchet up any further.
Yeah, and India is a special market. India has had those restrictions in place for a while, so this is something that they prepared for. The problem in moving production, and Tim Cook has referred to this himself, is that the manufacturing network that Apple has built in China is very efficient and able to ramp a lot of units in a short period of time. So, it depends upon the permanence of these tariffs and the outcome of any kind of trade negotiations that happen. And again, if they do it, it's going to be something that's permanent. So I think what Apple wants to make sure is that if there are tariffs in place, the tariffs are permanent. And if they do that, they can work to move production, but it will take some time, just as these India production took time to prepare for as well.
Hey, Chris, on 5G, we've had some people who are less enthusiastic about the stock argue that 5G is not a consumer-centric innovation, given how finely we are now parsing latency. What do you make of that view?
Yeah, and the holy grail of 5G, it's true, is not consumer. It's more about connecting everything, connecting cars and appliances and things like that, because your main benefit from 5G is that you can connect many more devices to the network. But in doing so, it also improves the coverage so that, as I'm in Midtown Manhattan right now, if I go outside, it's sometimes difficult to get a signal when the network's congested. I think that alone will be compelling enough for people to go to 5G because it will fill in the gaps of coverage. It also obviously provides a speed benefit when it becomes more widely available. And the argument right now is that there aren't apps that take advantage of that. But I think there's a little bit of if you build it, they will come. And once you provide these low latency, very fast networks, then the app developers will find a need for that.
What would be like an ideal example of that, short of gaming?
Well, again, it's stuff that hasn't been invented yet, right? So, I mean, gaming is a great example of it. But what it needs to be is an application that is mobile, that you want to use while you're on the go, and requires a fast connection. So this is the tough part, is you can't really point to something today, but you have to have some faith that developers will use it. One of the other things we've found that we expect in this upcoming 2020 iPhone is sort of a Face ID camera on the back of the phone, which will enable some augmented reality, virtual reality type applications, probably used for gaming to start. But I think that would probably be a good companion to 5G and open up some new possibilities. And really, I think what Apple's going to do is put the hardware out there and let the app developers run with it and see what they come up with.
Yeah, I think actually we're sandbagging on 5G a bit here based on some applications I've seen. Some high-resolution live streaming could be interesting. But Chris, we were in this weird situation. It's weird to me because we haven't seen it in years, where analysts are actually optimistic about Apple and iPhones ahead of us actually seeing the numbers. Normally it runs the other way. So how bad would the numbers for this holiday quarter have to be in order for it to turn you net pessimistic, given that you're largely looking out to the 5G cycle for your optimism?
Right, and this is, again, the basis of our upgrade back in July is that this year somewhat doesn't matter. And we understand that we're at the end of a cycle right now, so whatever they do now, as long as it's not, a real disaster, it's not going to change our view.
What's a real disaster? That's what I'm asking.
Yeah, I mean, again, from a short-term perspective, with the stock up, it's within 5% or so, let's say. But again, I think it would have to be something that would change your thesis going forward on 5G. And again, it's not like with Apple not talking about future products, it's not likely for them to do that.
Okay, Chris, we'll see. Interesting note. Thanks for being with us.
Thank you.
Getting some more details coming out of that last-minute opioid settlement as McKesson, Cardinal, AmerisourceBergen, and Teva narrowly avoid a trial. For that, we'll go back to Meg Terrell in Cleveland. Meg?
Hi, Carl. Well, these companies have narrowly avoided this trial, but by no means is the opioid litigation saga over for these companies or others. Just before the first federal trial was set to kick off this morning, we got word that the settlement had been reached with 4 companies worth $260 million, with just these 2 Ohio counties that were the plaintiffs in this trial. That'll be $215 million in cash from the 3 big drug distributors, McKesson, AmerisourceBergen, and Cardinal Health, as well as $20 million in cash from Teva. Plus, what we're hearing is $25 million in anti-addiction drugs that Teva will provide. That'll be over 3 years for Teva. Now, Walgreens was also named in this trial. They did not reach a settlement. And what we understand is that the judge is going to work towards setting a new trial date. So Walgreens isn't off the hook here for these 2 counties right now. Now, 4 other drug makers had already settled. So altogether, $300 million or so going to these 2 counties in Ohio. As you look at the way the stocks are trading this morning, the distributors are down. Teva is up a little bit. And that's probably for the distributors because they're still trying to work toward a broader global settlement to wrap up the thousands of cases against them. And of course, Teva is involved with trying to do that as well. There are more than a dozen defendants across the drug industry and the supply chain that have been named in these thousands of cases. So this is far from over. And upcoming litigation includes the next federal trial, which hasn't yet been scheduled, as well as several state trials. We talked with the co-lead attorney for the plaintiffs in these federal trials, who's representing the cities and counties, about whether we're going to keep seeing these piecemeal settlements. Here's what he said.
It'll go that way until we reach the global, but we think the right thing is to have a global settlement, but it's got to be a fair global settlement.
And guys, talks were going on late last week of a settlement of up to $50 billion potentially from some of these companies. Joe Rice telling us that number's not high enough and the money needs to go directly and quickly to the cities and counties, people on the front lines of this epidemic. Back over to you.
So many suits, so complex. Meg Terrell, thank you for bringing us the latest. Meg Terrell in Cleveland. Another tech mover to get to this morning, Pinterest, getting an upgrade to outperform over at RBC, citing strong user trends and an attractive risk-reward. Stock's up 4% right now, and Mark Mahaney is with us on the other side of this break. Don't go anywhere.
There's golf. And there's the golf lifestyle. Shop with Golf has everything you need to go from the drinks to the links, to the boardwalk and the boardroom. This is the sweet spot for the moments you love and the looks you'll love even more. Because golf's more than a game, it's a lifestyle. Live the lifestyle at shopwithgolf.com.
Hi, my name is Sam Davis, and I'm going to tell you about exciting plans available to anyone with Medicare. Many plans provide broad coverage and still may save you money on monthly premiums and prescription drugs. With Original Medicare, you're covered for hospital stays and doctor office visits, but you have to meet a deductible for each, and then you're still responsible for 20% of the cost. Next, let's look at a Medicare supplement plan. As you can see, they cover the same things as Original Medicare, and they also cover your Medicare deductibles and coinsurance, but they often have higher monthly premiums and no prescription drug coverage. Now, let's take a look at Humana's Medicare Advantage plans. With a Humana Medicare plan, hospital stays, doctor office visits, and Medicare deductibles are covered. And of course, most Humana Medicare Advantage plans include prescription drug coverage. In fact, in 2018, Humana Medicare Advantage prescription drug plan members saved an estimated $7,400 on average on their prescription costs. Most Humana Medicare Advantage plans help you stay active and keep fit by including a Silver Sneakers fitness program at no extra cost. And you may be able to save on dental and vision expenses because coverage is now included with most Humana Medicare Advantage plans. You get all this coverage for as low as a $0 monthly plan premium in many areas. And your doctor and hospital may already be a part of Humana's large network. If you want the facts, call right now for the free decision guide from Humana. There is no obligation, so call the number on your screen right now to see if your doctor is in our network, to find out if you could save on your prescriptions, and to get our free decision guide. Licensed Humana sales agents are standing by, so call now.
I'm Scott Wapner. Here's a look at what's coming up top of the hour on the halftime report. A very big week on tap for earnings. So will they carry the market higher or raise even more questions about the state of stocks? Plus, the three things that need to happen to propel your money higher. Mike Santoli joining us with that list. And a hedge fund manager who's taking on stock buybacks. Why he says they're not all they're cracked up to be. And Jim Cramer joins us for the hour. We'll see you at noon. We're about 20 minutes away, Morgan, and we'll see you then.
Sounds good. Looking forward to it, Scott. Thank you. Shares of Pinterest jumping sharply this morning on a bullish call out of RBC, taking the stock up to an outperform and raising its price target to 35. Shares are currently up about 4% right now. The analyst behind that call is joining us, RBC's Mark Mahaney. Mark, great to have you here today. Break down this upgrade. Why and why now?
Okay, thanks, Morgan. Let's see, why now? Well, we just surpassed or passed by the major lockup expiration, which is almost always an overhang with these IPOs. Uber and Lyft actually just went through it. Or no, Lyft went through it. Uber is going to be going through it soon. But anyway, that's one. Secondly, we've seen pretty strong user trends over the last year and a half that we've been tracking this asset in private and public markets. Third, there's a lot of innovation that we're seeing, necessary innovation here on the ad side. The big missing link, I would argue, on Pinterest so far is just how much lower their monetization is versus peers like Snap, Twitter, and even Facebook. They'll never match Facebook in terms of monetization. They don't have that reach and scale, but they can at least get closer. And one of the ways they do that is to get out these self-service ad tools so that small and medium-sized businesses can get onto Pinterest, and they're doing that now. So we think there's a real gap-up opportunity there fundamentally, and we like the valuation here. We think the risk-reward is highly compelling.
Yeah, I mean, it's kind of amazing. We've been talking a lot, especially in recent weeks, about IPOs that have largely fallen flat. Pinterest is not one of them. Stock's up something like 40% since the IPO back in April. I guess in terms of the price target and how much further you think this could go, how are you thinking about valuation here, especially in light of those monetization metrics?
Yeah, so Morgan, that's the right setup here. We think there's a little over 30% upside here. Fundamentally, this is one of the stronger assets that we see in kind of mid-cap internet land. It's around a $17 billion market cap name. doing about $1 billion, $1.1 billion revenue run rates, growing about 50% year over year, 70% margins. It's not yet sustainably profitable. The advantage that Pinterest has, however, is that there are comps out there. There are bogeys. There are other business models like this that have generated really nice margins. Facebook's one, Twitter's another. So there's no real question about the long-term profitability of this business. And we think we're going to start seeing sustained profitability next year. So we'd rather get in before that's clear to everybody. And while they can, we think, sustain reasonably high growth rates, I'd argue for the next 2 or 3 years, I think this is a 30% plus sustainable revenue grower, and I don't think we're going to get the Twitter dip and the Snap dip. I actually think this management team to date has shown much better track record than those two assets did at the time of their IPOs.
Hey, Mark, are you using lockup expirations as a tactical opportunity? I mean, in pins and any other names where it comes around?
I think you have to. We put in our report, and we do have a buy on Uber and it hasn't gone through the lockup expiration. However, that stock traded out of the gate way down, and I thought the valuation was a little bit compelling. But there's no question we've seen a trade-off in stocks going in and out. The market concern is always that supply is going to get unlocked, and if you believe that, it seems like the market does, there's clearly a trade-off going into expirations and a trade-up coming out of it. So I think you can tactically take advantage of that.
Mark, Pinterest users have a high intent to buy, and they're highly satisfied. But then on the other hand, Pinterest overall doesn't seem to be just hell-bent on growing. So is this a niche platform, and what do they have to do to get you to either see it as a breakout possibility beyond that, or to kind of sideline it and say, it's only ever going to get so big?
Well, I think a lot of this is going to come down to product innovation, both on the user and the advertiser side. So we're watching out for two things. On the user side, can they break out of their kind of core demographic? This skews very heavily female in terms of, and that's also in terms of the products that have had the most traction to date: beauty, home products, fashion. If they can expand beyond those verticals, that shows you the extensibility of the model. And one of the areas we pointed out in our report is travel. That's actually become one of the bigger categories now on the site. You should think about it as a place, if you're going to go to Austin, Texas, San Francisco, if you're going to go to Tampa Bay, there's a great bucket list of things you can do. It's almost like TripAdvisor, but you can find it on Pinterest too. So there's that kind of expansion there. And then on the advertiser side, I guess the most important thing is make the tools easy for small, medium-sized businesses. That's what's powered Google to date, and large advertisers do. But that's really the secret sauce of internet advertising. It's a place where small businesses can get the word out. Pinterest now is allowing people to get the word out, and we think we'll start seeing that in terms of accelerating ARPU growth probably sometime in 2020.
All right, Mark Mahaney, thanks for joining us today. Shares of Pinterest are up
Thanks, Morgan.
more than 4% on this upgrade.
After the break, what if you couldn't subscribe to Netflix? Former FCC Commissioner Robert McDowell will join us next to explain the strange law behind his latest op-ed. Back in 2 minutes.
My reputation was trashed online. I felt completely helpless. My entire career and business were in jeopardy. I called Reputation Defender.
Take control of your online reputation. Get your free reputation report card at reputationdefender.com. Find out your online reputation today and let the experts help you repair it.
They were able to restore my good name.
Visit reputationdefender.com or call 1-877-866-8555.
Growing a business is tough. Sometimes you have to think outside the box. Today's consumer expects quality and convenience. If your product requires assembly or delivery, Tackle has a network of over 70,000 providers who can make your company more productive. Tackle can even help with same-day service. The Tackle app uses state-of-the-art technology to connect you with skilled people who can help with all kinds of small jobs. Visit tackle.com/partnerships to see how Tackle can help your company grow.
The future of money is female. Women today control $6 trillion of investable assets. We don't need to be given power. We have power. We just need to use it. There is a gender investing gap. We women invest less than the guys do. Ellevest is a tech-enabled financial platform for women. We're in a capitalist society, and women are not going to be equal until we're financially equal. By having women invest more, it's good for our economy. It's good for all of us.
Get ready for Brexit on the 31st of October. Brexit will bring changes that affect businesses in many ways, particularly if you buy from EU suppliers, sell to EU customers, provide services to EU clients, and receive customer data from other businesses in the EU. Businesses need to prepare. Find out how at gov.uk/Brexit. Get ready for Brexit on the 31st of October.
What can you get from Tesco for £1 each this Halloween?
A pumpkin.
More.
A spooky pumpkin cup.
More.
Ghostly balloons. Spine-tingling spider webs. Ghoulish plates and napkins.
More. Yes, it is scary what you can get for just £1 each this Halloween.
Tesco. Every little helps. Available in selected larger stores.
Tonight, it's Sheffield United v Arsenal in a cracking matchup. And with Now TV, you can watch all the action live for a one-off payment of just $9.99. Hold on, they're checking with VAR.
That's confirmed. It's $9.99.
What a game changer. So, to only pay for the games that matter to you, grab a Now TV Sky Sports Day Pass. Search Now TV Sports. 18 plus, content streamed via internet, full terms apply.
Sure, stocks like Disney and Netflix dominate the headline sector so far in 2019. It's actually the old school names outperforming the new ones. Class is in session from Dom Chu's Sectornomics. Dom.
All right, so if we take a look at the way communication services sets up, it encompasses so many different types of companies, new media, old media, many of those FANG names like Facebook, Amazon, Netflix, Google, although Amazon is technically a consumer discretionary stock. But take a look at the sector overall, because so far, over the course of this year-to-date period, communication services in that white line outperforming the broader S&P 500. But if you take a look at media, new versus old, take a look at how we as consumers consume television or video these days. It's no longer just about the traditional cable companies, but names like Disney, also Netflix, other streaming type companies. Would it surprise you to learn that if you took a look at all of those traditional broadcast cable broadband companies, they're actually outperforming all those hot streaming names? Here's what we're going to show you. This is data according to Y Charts. They took a look at an equal weighted basket of old television type companies. Think Charter, think Comcast, the parent company of this network, think AT&T, Dish Network. Now you take that compared to Disney, Netflix, Apple, and Alphabet, some of the names more closely subscribed to streaming video. In 2019, those old name cable companies have gained about 44% year to date, an equal weighted basket of them. Meanwhile, Disney, Netflix, Apple, and Alphabet on an equal weighted basis so far this year, 26% higher. That's a massive gap. So the issue is whether or not that trend in cable, video, broadband media continues. It'll certainly be a fun trade to watch as this year wraps up. Back over to you guys.
Yeah, especially since eventually we won't know which of the group they're in if all this trend continues. Dom, thanks. In the meantime, what if you couldn't subscribe to Netflix? That's the question our next guest asks in his latest op-ed for the Journal. Says that some congressional courage could potentially level the playing field for traditional TV broadcasters. Former FCC Commissioner Robert McDowell joins us this morning. Commissioner, good to have you. Good morning.
Thanks for being here. Thanks for having me. Good morning.
You're basically talking about lifting ownership caps. What prompted this idea?
Well, first of all, the changes in the marketplace, right? So back in 2004, when Congress passed a law that said a single or individual broadcaster or owner could not reach more than 39% of the country to market its video if it used stronger broadcast signals. This is just free over-the-air TV stations. Or 78% of the country if they used weaker signals. That was in an era before internet video, before Netflix or Amazon Prime, et cetera, right? So now you have a huge shift just in the past 3 or 4 years of people looking away from traditional TV screens and more towards smartphones and other internet-connected devices of all kinds. And that's where the eyeballs are going. You know, Reed Hastings at Netflix has said his biggest competitor is sleep. He's just trying to get more people to spend more time watching video. So what does that tell you? You no longer need to worry about free over-the-air TV broadcasters having some sort of gatekeeper status over video. In fact, more and more people are looking away from free over-the-air TV and towards other areas. Millennials are actually blending free over-the-air TV with digital, internet-based, over-the-top content providers.
Sure.
So it's an exciting time. That law is outdated. Needs to be scrapped.
Is it your view that the old school legacy players are disadvantaged here? Because we just did a segment about how their stocks are doing better.
Yeah, so actually some of those, you had Comcast, which has cable and broadcast. You had an interesting mix there. So there are different silos. I'm cutting some crosstabs on that analysis, which was fantastic, by the way. I loved it. So you're seeing a lot of experimentation in the marketplace, but you only have one market segment that's constrained by such a law. Every other video content producer and distributor can try to reach 100% of the American people, except for free over-the-air TV broadcasters. And that's just outdated and not needed. Go ahead.
Robert, so I wonder, it seems like some of the things we used to talk about, local TV and newspapers, about problems of dominance overall and cross-ownership, now we're talking about Facebook for that sort of thing. Do you think that's warranted to take it out of the conversation of legacy media a little bit? When you look at what these restrictions were intended to do, are they needed over a platform like Facebook or YouTube today?
No, so I'm not arguing for regulating tech the way broadcasters are regulated. That would not be a good idea.
I wonder if you will.
I would hope not. I think the marketplace is so insanely and wonderfully competitive right now. It's such a great time to be a consumer of video content. You can get it on all sorts of platforms and from different producers of video, unlike any other time in human history. So this is not the time for 1960s style, or in this case, 1930s style, media regulation. This is a time to relax those, let these market players knock the stuffing out of each other in the marketplace and see what happens. There's tremendous potential for investment and innovation, but you have one segment that has this millstone around its neck, and that's this silly law that does not allow an individual owner to reach 100% of the country for video content if they're distributing that over the air, over TV stations. And that's insane.
Robert, the fact that this law pertains to one specific segment, to the broadcaster segment, with all of these different companies, some of them, you mentioned Comcast, which is our parent company, owning broadcasters, but also building out their own services, their own video services, how do you think this is incentivizing or, I guess, driving where investment and innovation is going, and also potentially deal making?
Excellent question. So by law, a broadcaster cannot go above that 78% ceiling, right? So that's going to stop some consolidation right there, and in a way that's not good. As companies like, let's say, Gray are investing in local news and content and are able to distribute costs across a larger footprint of households, that's exactly what a Netflix can do. It can distribute its costs across the whole country, but TV broadcasters can't. So you're absolutely right. That is influencing M&A. And then another thing we need to talk about is there's a federal appeals court out of Philadelphia, the Third Circuit, that for 15 years, every time the FCC tries to relax rules, this appellate court gets in the way. There are only 2 judges, by the way, 2 judges out of the whole country who are getting in the way of some sensible modernization, and that's going to cast a pall over deal-making and innovation and market experimentation as well. And that's not good either. So hopefully the FCC can win that on appeal either before the full Third Circuit or the Supreme Court if necessary. But that is, all the broadcasters are now looking at that decision, wondering here in the coming months, what's that going to do to deals going forward?
Commissioner, provocative piece. It should be read. Thanks for elaborating on our air. Good to see you.
Good seeing you. Thank you.
As we head to break, keep an eye on shares of Peloton today. Several firms initiating coverage on the stock this morning. We're going to break down the highlights next. Stay with us.
Sectornomics is sponsored by Sector Spider ETFs. Visit them on the web at sectorspiders.com.
Can you customize the S&P 500 to meet your client's income objective? Only Sector Spider ETFs can divide the benchmark into 11 investable pieces. This allows you to underweight sectors like technology and overweight sectors like REITs, staples, and utilities. Sector Spiders, write your next chapter in investing. Before investing, consider the fund's investment objectives, risks, charges, and expenses. Go to sectorspiders.com for a prospectus containing this information. Read it carefully.
It's just a quarter, right? But what if Acorns automatically saved that quarter every time you bought coffee for a month? What about a year? 10 years? And what about the change from food, movies, parking, gas? What about the change from everything you buy? And what if Acorns invested it all in the market where it can grow through the power of compound returns? What if you didn't have to change your life to change your life? Then it's not just a quarter, is it?
Exploring the heart of historic Europe with Viking, you'll get closer to iconic landmarks, to local life and legendary treasures, as you sail on board our patented, award-winning Viking longships. You'll enjoy many extras, including Wi-Fi, cultural enrichment from ship to shore, and engaging excursions. Viking, voted #1 river cruise line by Condé Nast readers. Learn more at vikingrivercruises.com.
At Southern New Hampshire University, we believe in education built for all people.
SNHU was the best experience of my life.
Without SNHU, I wouldn't be the leader I am today.
I graduated high school 19 years ago. I still finished.
In the military, you feel that sense of accomplishment. That's what SNHU is.
You will march from this arena and say to the world, I did it.
You did it. I love you. I love you too.
Johnson & Johnson is a baby company. But we're also a company that controls HIV, fights cancer, repairs shattered bones, relieves depression, restores heart rhythms, helps you back from strokes, and keeps you healthy your whole life. From the day you're born, we never stop taking care of you.
Earnings Central comes alive. Numbers and instant reaction from these corporate giants. Plus P&G's CFO on his company's results. First on Squawk Box tomorrow.
Welcome back to Squawk Alley. Some IPO news to get to this morning. Initiations coming out on Peloton, largely positive, with JP Morgan and Barclays both going overweight to start. Nonetheless, the stock is going the other way today. It's down about 6%, trading at $22 a share. IPO price, just a reminder, was $29 a share. Meantime, online mattress retailer Casper is reportedly working with Morgan Stanley and Goldman Sachs on its own coming IPO as well. And Casper is expected to debut in the first half of 2020.
Don't sleep on that one. It could be big.
Oh,
you never
boy.
know.
Tomorrow we're going to get McDonald's, Procter & Gamble, UTX, UPS, Hog, and then Chipotle after the bell.
Yeah.
Even though we've been stuck in place pretty much all morning long with that Boeing drag, S&P 3002 10-year making another run at 1.8. Just hit it a couple of seconds ago, so watch that as Kramer joins the judge for the half. Let's get back to HQ.
Carl, thanks. I'm Scott Wapner. Front and center this hour. Earnings and the run to new highs with some of the biggest names in the market reporting this week. Should investors bank on another burst? It is 12 noon, and this is the halftime report.
Boeing, McDonald's, Caterpillar, Amazon, and Microsoft. Just some of the big names set to report earnings. Will their results push the market to all-time highs? Apple hitting record levels, and the price target just got raised to a street high. Jim Cramer weighs in on the stock and other FANG names. Stock buybacks have been a major catalyst for the bulls, but is the buyback boom coming to an end? What it could mean for this market. The investment committee is ready to go. Halftime report starts right now.
Welcome. Good to have you with us on this Monday. Our investment committee at the table, Joe Terranova, Josh Brown, Steve Weiss, Bryn Talkington is back, the managing partner at Requisite Capital Management in Houston, home of the Astros. I see I'm throwing you a little something there.
All
and
right.
CNBC's Jim Cramer, host of Mad Money. Let's begin with the market. Stocks higher. The busiest week of earnings season yet is underway. Jim, you heard Carl at the end of their show run down the list, 12 Dow components. You want to tell us what you think is at stake this week?
Look, I think it's a really interesting week because there's a lot of pin action today. Remember, we had a couple of companies report very good numbers. We had, let's just look at some of the, let me give you one that people should be talking about, Dover. Big industrial. Honeywell, big industrial. These were very good numbers. We also had what I regard as being an important tell again, and I wish Stephanie were here, because we both feel United Rentals is a terrific tell of the real economy, and it was very strong. People reacted positively to it. So I use those as the weakest part of this of the situation has been the industrials. Then you look at take Coke and PepsiCo. You know, like Coca-Cola's quarter was really extraordinary. Remember when it used to be really important? American Express, you and I both know the CEO there. That company reported a great quarter, and people didn't receive it as a great quarter because they didn't do enough homework. And then ultimately, what stock is leading this market? Well, it's not a FANG name. It's J.P. Morgan. And J.P. Morgan is perhaps the best leader you could have.
So, given, Steve, what Jim just laid out, you could easily make the case that earnings have been pretty good from some pretty important companies. Is that enough to carry you to get to these new highs, less than 1% away on the S&P, but more importantly, to go beyond that?
Look, I still think we're in a trading range. That's the bottom line. And it's going to remain in a trading range until we get greater resolution on China or some more positive movement. That could be at the G7, it could be, or the G20, it could be a tweet. It could be a statement by the Chinese media. But that's what we need to see. That's keeping the lid on the market. So what we're seeing in earnings season is pretty much typical of what we've seen in other earnings seasons, which is that they manage down during the earnings season, and you see, the same number of companies, not the same companies necessarily, but the same number of companies come in, beating the top line, beating the bottom line on reduced expectations. That's fine. But we've also got the Fed out there. Now, I personally don't think the market, if the Fed does not go, and I know the market expects them to, I don't think it's a disaster for the market. I think there's a knee-jerk reaction down. That gives you the opportunity to get into some stuff. But I continue to lighten up my positions. Again, non-core positions. I sold MasterCard because I've got Visa. I've got a big position in Visa.
Okay, fine, because one or the other.
I just didn't need to have so much. And Visa's a pretty decent size position.
Visa's great.
Boeing's caused me some issues. I actually bought some more Boeing on Friday. It was down about $14, and that was clearly a mistake. I still think I'm okay. I heard your comments today on air, and I agree with you completely.
Okay.
I agree with you.
Let's not forget Boeing. Boeing does report this week. We're going to do it a little bit later, but let's just do it now.
I'm concerned about the report.
Jim, this morning on the show, said, I've been had.
Right.
Boeing wasn't a good actor. Really important that they take action. So you're looking for, can you be a shareholder in Boeing today?
Not without action. It distinguishes the fact that there's a past and a forward. And one of the things that I think made us, several analysts and for me, feel comfort was we were told over and over again, if the government would only let us tell our story and let us show what was going on inside, we would feel so much better. Well, the government showed us what was inside, and frankly, it was much worse. So what you have to do is come up with a storyline which says, look, that's all the past. Forget that. What matters is you've got triple redundancy. This plane is terrific. It's ready to take off. Did we screw up? Yes. If there are lawyers, like David Faber said, that are really controlling the narrative, then the board has to take action and say, you know what, we're going to override the lawyers. We're going to take the bullet. Maybe we even have to spend billions to make up for what we did. But it's important to go forward. The company is looking backward. It's really rather surprising. This is a great American company that is being let down by its own people. This is a brand and a company and a history and a story. As anyone's been to the World War II Museum in New Orleans, you would be appalled. The company that made the B-29, that made my father live and not die in the 6th Army, where's that Boeing?
So, obviously the Dow would be a better performer today if Boeing wasn't having one of its worst days in an awfully long time. I think, since 16. That stock has been hammered.
I think we have to look at with Boeing. We actually bought Boeing earlier in the summer for clients with covered calls attached to it, and we felt that this too shall pass. But what was interesting for us when we decided to get out of that position is when Gary Kelly, he may have been on the show with you.
Wow, that was a seminal moment.
Gary Kelly came on and said, we thought this was going to be a 9-week event. This is now becoming a 9-month plus.
And that's when you sold it?
That's when we sold it. And we said, you know what? As John Maynard Keynes says, when the information changes, we change our mind, sir. What do you do? And I think this is just a continued narrative that we just don't have all the facts. And I do think it's like, as an investor of clients' assets, we didn't feel it was responsible to keep it in the portfolio.
So I want to sort of go beyond.
Can I disagree with that? I'm going to disagree with that. On one hand, but if you're saying that when you go into a stock under the premise or under the anticipated facts of X and they change, you can get out. That's legitimate. That's a discipline. Mm-hmm. But I also believe that when you know all the facts...
What are you disagreeing with? That's what she said.
What I'm disagreeing is when you know all the facts, when everything comes out, then it's too late. And the way I look at it is I've got two companies in this business, Airbus, which is already under-delivering, and I've got Boeing. Boeing's not going out of business. No. So I have to wait 3 months longer to own one of the greatest companies in the world, or rather wait 3 months to realize my gains?
Well, I think though, from our standpoint, though, as there's so many wonderful companies, so we don't have to just own Airbus or Boeing. We can just move on, right? And we can buy Apple or Goldman or Cisco or many other companies. But with us, though, we don't know all the information. But when Gary Kelly with Southwest Airlines is the #1 purchasers of 737 and the 737 MAX, when he says he doesn't know, we have the humility to say, well, if he doesn't know, then how do we know? And so we just decided to move on.
I think it was ridiculous. I had no idea when I bought the stock. I knew there was a major cloud over it, and actually worked out well for quite some time. I have every confidence to continue to work out. For anybody to be able to say, I knew this was going to be back online in 3 months, 6 months, 9 months, was ludicrous. You never know. There's always another shoe to drop. This was a big shoe. And by the way, we're not so sure about this information. If you read Boeing's statement that came out today, it said that this test pilot sent those texts while the simulator was still being tested for it in 16. Correct. And it's not dispositive of the situation necessarily.
So let's move beyond it. I don't want to spend any more time on the innards of what's gone on with Boeing. The points I think were made. You mentioned that you bought Cisco. Mm-hmm. Of your entire, your list of stocks that you own, and you own a lot of very big names. Apple, Bank of America, Bristol, CVS, Delta, Disney, Goldman, Microsoft, NVIDIA, Qualcomm, and you recently added Cisco. Why?
So I think, what happened last quarter when they reported earnings, they have a great CEO, and time will tell, but I felt he was somewhat overly negative and overly cautious. He came out and said, China's potentially not letting us bid for our services, and they're going to be more nationalistic approach. And the stock really sold off. The stock was at 58 2 months ago, and now it's around 46. It hit 46, and then it's been bouncing. We entered the position around 46. It's probably going to form a base here, but I think when you have this old guard tech company that's pivoting from a hardware to a software, they're getting into cybersecurity, love the management, it's got a nice yield. We'll be patient here and buy and just have an entry position into the stock.
Jim?
I totally agree. Chuck Robinson, other than the fact that he is a devout fan of the Atlanta Falcons.
They're struggling.
Just a moment of silence. I do think that
they're down 17% in 3 months too.
Well, exactly. And you can look. Is Cisco going to make the playoffs this year? It's not clear, but they do have a 3% yield. They got a great balance sheet. I do think that Chuck was overly negative. There are very few companies that are discounting technology with that level of quality. So I share not your optimism, but I share what we regard as both as a constructive situation.
I'm just curious. How do you know when to trust what somebody says versus when you don't trust? So you're trusting Gary Kelly, right? But you're not trusting the CEO of a company that you just bought. So how do you make that determination?
That's why we have a stock market, first of all, is you have all sorts of opinion and all sorts of views. And so really we were coming in with Boeing and just saying, you know what, we think he has really good insights, Gary Kelly, and so we'll just move on. I think with Cisco, we think it's a great company, first of all, and I think that he's a good, smart CEO. And if you just look at the numbers, China is a really small part of their business, and I think it's an undervalued stock, and it was a good entry position. So it's not binary between trust and not trust. It's really, this is art and science, and we were weighing that we think Cisco, in its own little discrete basket, is a great company to own.
I'm trying to figure out where you're trying to get at with this. You bought the stock. She didn't she sold the stock. What's the big deal?
What I'm getting into is
that she doesn't agree with the same methodology that you use.
Here's what I'm saying.
What's the problem with that?
I'll answer if you let me.
Well, I don't know.
You want me to answer or not?
Go.
Okay, so what I'm saying is, based upon Gary Kelly...
I'm throwing a flag right then.
Saying that he came in, doesn't know when it's coming online.
All right.
They sold the stock.
They're two entirely different... There's probably other issues, too.
What are you doing, ordering a pizza? No. Actually, if you want to know the truth, I'm checking in to see...
Judge, you're losing control here.
Yeah, well, can we come back for a second to something that's incredibly resilient, and that is the market. The market's resiliency is fantastic. We were talking so much about a 10-year Treasury yield, and who knows where the 10-year Treasury yield's going to go, but it's not at 1.44% anymore. A German 10-year is negative 34 basis points, it was negative 78. So there's a story that's being told right now. How about the value of the U.S. dollar? Everyone was complaining about the U.S. dollar. The dollar is down 2% month to date. The stocks that you're buying in the last couple of days for the very first time in years is the financials.
Yes.
The morning of J.P. Morgan's report, I told you, I bought more J.P. Morgan. I bought more J.P. Morgan and USB in the last hour. When was the last time, Scott? When was the last?
It appear in the breakout?
100%. I'll buy J.P. Morgan at 123. I bought it at 120 after that report. That
you're going to buy that with a 3% yield and an incredibly low multiple?
That report,
that's how I feel people should say.
A to Z. That report from J.P. Morgan was fantastic.
It was beautiful.
USB's report, Josh, you talked about USB breaking out months ago. When was the last time we come on the show and we could talk about financials in the last 5 days up 6% and not giving it back?
Let's go back.
Morgan Stanley.
Last 5 years. Okay. Bank of America's breaking out now. That was a fine quarter.
Bank of America up 6% in the last 5 days. Financials. Small caps.
Yes.
I think also you see like everyone is there's such a overwhelming pessimism in the market that everyone